again, and welcome to our review of the upcoming Tuesday, October 7th trading session. In front of you, I have the economic calendar as per usual. And the first thing that comes to fruition during the session that's going to matter will be the BOJ press conference. We're not anticipating a whole lot in the way of movement. Really, if anything, they will try to talk down the value of the yen. So this, of course, could affect the dollar-yen pair and perhaps boost the Nikkei if they are willing to get a little bit more loose with their monetary policy. At this point in time, there's just absolutely no way that the Japanese are going to tighten. So really, it's kind of a one-way deal. After that, we have the UK manufacturing production, month over month, anticipated to be at 0.1%. Something better than that will help the FTSE and perhaps the British pound. Something worse than, of course, would work the other way. After that, we really don't have a whole lot in the way of announcements. We've got a couple Federal Reserve governors speaking, but really it's difficult to garner too much information from that, the day after, basically 2 days after non-farm payroll. So having said that, we believe that we will have to look to the charts to see whether or not the markets are setting up for a move. Looking at the dollar yen, you can see that we did pull back a little bit during the session on Monday, but really this is just the market, in our opinion, that is winding up between 108 and 110 to try to break out to the upside. It would be extraordinarily foolish to try to short this market right now, and we think that the floor is at 105, so really, quite frankly, we could fall as low as 105 and still find bullish and supportive candles. This is a one-way trade as far as we are concerned, and we will, in fact, only buy this market on supportive candles. A breakout above the 110 level would also have us buying and aiming for 115. That's a longer term call though, so we would be buying calls above 110 and calls on supportive action below, down near the 108 level, possibly even the 109 level, but even more so at 108 and most certainly at 105. No interest in buying puts at this point in time. You can see that the FTSE did in fact bounce during the session and on Monday, and if you look at the totality of the marketplace, you can see that this really had to happen if there was going to be any hope of a recovery. If we get better than anticipated British numbers tomorrow, we could continue to go to 6,600 and above there. I think things get really interesting as we could go all the way back to the top. It's a longer term and choppy call, obviously, but that is possible. So buying calls on a better anticipated number or a pullback with signs of support on short-term charts would in fact be interesting for us. Over at the S&P 500, you can see that we tried to rally, but 1980, an area that we had suggested previously would be a bit noisy and resistive, did in fact hold. We formed a shooting star, so now we have to see where the market goes from here. Either way, though, not really interested in buying puts until we break down through what, in our opinion, looks to be a pretty significant trend line. That being the case, we're just going to wait to see if we get a supportive candle or a move above 1980 in order to start buying calls. And finally, over at the euro-dollar pair, you can see that we bounced. This is a sell-only market. In other words, we're only buying puts. No interest whatsoever in going long the euro. And we believe that any little rally like this will sooner or later bring out the sellers. And that's exactly what we want to do. We want to wait for those sellers. This bounce is pretty natural considering it's right at 125. So we're waiting to see if we get a resistive candle. At that point in time, we are buyers of puts. We believe that the euro dollar could go as low as 120 given enough time. And with that, we've taken a look at the Tuesday, October 7th trading session.